The yen has fallen to a 38-year low, and that is something which is causing nervousness in the Asian markets.
Nasdaq was up 0.5%. So, AI-led optimism. Amazon was the mover yesterday, 3.5% gains on the stock. 7.06 crore shares, which is 20%, a little over 20% of India Cement's equity.
For now, the first tick on the index is a tad bit in the red, down about 40-odd points. Makes sense to see what both Ultratech and India Cements are doing at the moment. Ultratech Cements is up, but not too much.
Licensing pact that we have with GIB, it's a pretty comprehensive relationship.
June 28 is an important day for India's bond markets, for rupee, interest rates, and indeed the Indian economy. Starting June 28, Indian government bonds enter JPM's Global Bond Index for emerging markets.
Flatlining for the benchmark indices, it's gotten a bit choppy.
इस बार भी महिलाओं ने बढ़ चढ़कर मतदान में हिस्सा लिया है.
CNBC-TV18 were the first to report that Ultratech has bought over 20% stake in India Cements.
69 points higher on the Nifty, but it's 100 point off the lows of the highs of the day today.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell, the last hour coming up here. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. It's been a very, very busy day. The markets got, 50-odd points. But Rima and Mangalam, I was just looking at from the gap down that we had,
yes,
all of the moves, you add up all of the ups and downs and ups, it's totaling about 500 points. 500 index points on the Nifty, and there's about 50 to show for it. As we start the last hour.
Classic expiry day, right? That's what you call it. Because we've seen near 1,400 points in terms of gains this series so far, which is the best since, December 2023, if I remember. And now with levels coming to rotund numbers, you had 24,000 on the Nifty, you had 53,000 on the Nifty Bank.
Yeah.
Maybe the street is going into July series ahead of the big events in July series a little light.
And we've managed to clock in so many gains in an election month where we had so much volatility. It almost feels like, that big slam dunk, that 5-6% move is long forgotten and markets have just been marching on. But we have the budget to look forward to. But not to forget, guys, this is also the day that the Nifty's hit 24,000 for the first time ever. And as the ticker team had pointed out, it took us only 23 sessions, which included the election day, to get from 23,000 to 24,000. And the big difference is in the last 1,000 points is large caps like HDFC Bank, Reliance Industries have come to the party. Today also Reliance Industries is holding up in the green, but the biggest contributor has been IT. And the Nifty IT index today has hit a fresh 3-month high. It's a 1.5% gain on that. So it's been busy and momentous for our markets.
There's a match also today, right?
8 o'clock.
There was a match.
There was a match?
I'm surprised no one said India-England.
India-England is in the evening. In the morning, there was South Africa-Afghanistan, and South Africa thrashed Afghanistan. So the beauty is that for the first time in the last 7 occasions that South Africa has reached the semi-finals of any ICC event, the first time they're going on to the finals. So let's see how that pans out. I mean, it's one of those days where, you're not even done with half the day, the calendar day, and news worth nearly 4 days has played out.
I'm just happy it's a T20, so I can actually watch it. It will get done. Imagine if it was an ODI and you...
It can be as long as an ODI if it rains. Who knows?
Fine.
There are
Don't be a
85% chances of rains.
All right, we'll talk more about cricket as we go along. But actually, I just want to say one thing. Broader markets are looking a little weak today, and that is very, very clear. So it's almost 3-1 declines to advances. Nifty's up 50 points, but look at the market breadth. You got about almost 2,000 stocks which are lower and about 700 stocks which are higher. So it's really one way, and the divergence actually is only growing. Pull up the Nifty small cap index, if you will. It's down a full 1%. So, I mean, if it is about single stocks and and it's been about that, portfolios, etc., I think it's not exactly the best of days. Mid cap index also is down, so keep that in mind. Now, it's absolutely, I think it would be nice if you get a little bit of consolidatory kind of price action, because it has become, especially after what we've seen this week, which has been so good, a little too one-sided. And sometimes when that happens, and we were talking about that same time yesterday in terms of FII positioning in index futures, it's just one indicator. It's swung from extreme pessimism to a bit of extreme optimism in the extreme zone broadly, and that is just a signal sometimes. So we'll see. But we're at about, what, 23,930 on the Nifty right now. Let's tell you what trades you can take specifically with Mitesh is with us. Mitesh, good afternoon. Good to have you here. So just weigh in on everything you heard and, of course, what you're watching. What are the trades?
Prashant, I think, the Nifty hit 24,000 has come off from there a little bit. Again, the trend isn't under threat, but it's, a sluggish move. So I would be willing to take some profits, trade the stop loss tighter now up to about 23,800 and see how it goes. This is on the spot. On the trading side, NTPC is a buy with a stop at about 365 for targets of 385, while National Aluminum is on the selling side. Keep a stop at about 185, look for targets of 172.5.
All right. What's also interesting is that today in the broader markets, like you were pointing out the weakness, one interesting trend is earlier we would get any PSU or rail-related stock or defense-related stock announce an order win, and we would see a big jump in the stock prices. On the other hand, today, there were order win announcements that came in from KEC. That stock is doing well, but it's currently off the highs of trade, so currently at the lower level of today's trading range. In the meanwhile, we also got in orders from RVNL. RVNL won some orders from government agencies, etc. That stock too has moved to the low point of trade. So
EMS also, I think EMS also won an order, and that's in the red right now.
So that just tells you the mood of the market right now. Having said that, you said the moves around the lows and the highs were close to 500 points. We're not done yet. Why do I say that? Because 24,000 call has a fair amount of writing. So every time the Nifty makes a move towards that 24,000 mark, we can see some congestion. But at the lower level, the 23,900 put has been equally active. So even when we started the show, the Nifty was closer to 23,910, 23,920. From there, we've seen a good 30-point up move. So both the lower and the higher end of the markets are keeping each other busy. It's a tug of war, which explains the kind of moves that we're seeing.
Absolutely. And, we'll discuss this. Maybe not done. A few more moves left before we call it a day. By 3:30. Mitesh, anything else jumping out at you in terms of obvious trades apart from what you've mentioned?
As I said, I think today's expiry day, so today's move is somewhat biased in the sense that it could actually go the other way tomorrow. So I would be rather today be more quietly taking trades, and therefore I'll stick to what I've accumulated from these two.
Then maybe we'll chat again at about 3:10 or so. Thanks very much, Mitesh, for that. PB Fintech is what we want to talk about. Stocks up about, I think, 4-5%. Citi is issuing a buy call, and they're putting out some reasons for it as well. Yash is here with details. Yash, over to you.
Well, as you rightly pointed out, PB Fintech is surging in trade today in an otherwise weak mid-cap space. And that is on the back of this interesting report which has come from Citi on PB Fintech. The rating is buy. And interestingly, Citi has increased the target price to 1,600 rupees a share from the earlier 1,435. Qualitatively, what Citi is saying is that they expect business momentum and strength to continue. Successful execution of their phygital strategy at PB Fintech is something that they're looking out for. They've raised the EPS multiple also to 20 times FY32 estimates versus 18 times. Also, what they say is that PB Fintech is the right alternate plan for the other general and life insurance companies. Citi, in its note, has opened a 90-day positive catalyst watch on PB Fintech. They say that the first quarter is likely to reflect 5 important things. The first one is sustained growth in fresh retail health as well as term insurance premium. The second one, continued improvement in their point of sale person margins. The third one is a strong growth in motor insurance premium. Fourth one is sustained improvement in their overall EBITDA margins for the first quarter. And finally, revival in the Pesa Bazaar disbursement business, which was actually weak in the fourth quarter. They've also highlighted 2 negative risks to their upside estimation. First one is slowdown in their underlying premiums, and the second one is higher than expected marketing and brand spends.
Right, Yash, thanks a lot for that. So that's about PB Fintech, the stock up around 2.5%. Meanwhile, we are also seeing some traction in names like macro tech developers. Over the last couple of trading sessions, there was some profit taking in the real estate pack, but now it seems to be picking up once again. So macro tech developers is the one that should come up for you. The other one that's interesting is Raymond. It's moved about 3% off lows, still sitting with a cut of about 1%. It has been a big mover all through this week, this month, this year, and today is the annual general meeting. So, it may be starting anytime now, so to say. So we've seen a swift recovery from the lows. Let's see how that pans out as well. Let's welcome Devin Choksi, who's the MD at DR Choksi Finserv, joining us now. Devin, good afternoon. It will not be proper if I don't start my question with your thoughts on the cement space and the big announcement that was made this morning, the deal that happened.
Yeah, good afternoon, Mangalam. Well, I think the important part of this entire activity of consolidation which is happening between the two large groups, the Ultratech and the Adani group, I think, which is comprising of ACC, Ambuja, among other smaller companies which they have acquired. I think it's very clearly defined with the 140-45 million tons capacity that Ultratech had before they acquired the stake, which probably I think took them to the larger one. I believe that they followed this particular process of Adani Group's narrative, wherein they said that I think they want to or they aim to achieve 200 million ton capacity in 4 to 5 years from now. And that's where I think both these large groups are trying to create the presence which is matching as far as I think the geographical aspect of presence is concerned. As such, in the commodity business, I think if you probably play your math right, in the sense that I think on one side, I think you take the market share in respective regions. And on the other side, I think you have managed the cost well, which to a greater extent, the advantage goes to the ACC Ambuja in particular. I believe that I think the players would probably try and play the consolidation game. And fortunately, today, if you see some of the smaller players, even they cannot be called so small, I think 10-15 million metric tons of capacity already available with them. And they are available at EV per ton of somewhere around 80 to 110 kind of a numbers, including I think companies like Ramco Cement, which is otherwise a very strong group, is still available at I think a valuation which is far more cheaper compared to the ones at which the ACC Ambuja quotes or maybe I think Ultratech quotes, which is far more above $250 per EV per ton. So from that particular perspective, you are getting an opportunity to consolidate at lower levels. And as a commodity, I think this commodity is likely to play out well, given the thrust on expansion in the country, infrastructure expansion in the country that we are having at this point of time.
Devin, is Eureka Forbes a company that you've looked at?
Not really. I think haven't been seen, I think, for some time at least now.
Okay.
Got that. Devin, just a quick couple of points. Specific names, right? PB Fintech, you heard Yash just outline what the buy recommendation from Citi, the move that we're seeing today. Any thoughts here?
So yeah, Prashant, the good part is that I think the company has come out of red. So at least I think that is the last quarter's performance, which is suggesting that I think they are now working in profits. And then that is another good part, that I think most of the new age companies, the fintech companies are basically working hard for making the money, and probably that is a good part here. Both the properties, the Policy Bazaar and Paisa Bazaar properties, both these properties are probably, I think, working well. In Policy Bazaar in particular, given the kind of larger amount of saving and investment funds in the hands of individuals, I think the more amount of insurance contribution will continue going forward as well. In fact, we are seeing the new business premium growth of around 20% for most of the insurance companies. And given the kind of strength that this company has created through the digital framework, I believe that I think they have the advantage. If they continue to remain in profit, probably I think the re-rating should be seen on cards. Other fundamentals being equal, I believe that I think the growth opportunity would be significantly higher, given the kind of increase in the wallet share as far as I think the individuals are concerned in buying the insurances, be it health insurance or be it even life insurances.
All right, Devin, Eureka Forbes has now moved to the high point of trade. They had an analyst day yesterday. So the key takeaways that people were looking at on Eureka Forbes was increased penetration of the products that they sell. We all know it as the company that sells AquaGuard, but now they're looking at, value-added cleaning solutions like vacuum cleaners, etc. as well. The penetration in India is close to around 6%, if I remember correctly, for AquaGuards, and some of their products, the categories that they're in, and that for something like a China and even countries like Philippines, etc., are in 20s, mid-20s to higher 30s, etc. So the penetration game is what the management is looking for. And from an FMCG standpoint, the only thing that the street is betting on here is what Pratik Pota does. Pratik Pota was, the man who turned Jubilant Foodworks around and then moved on to Eureka Forbes.
But he's been with Eureka Forbes for a while, right? I think
he's been about two and a half years. That also included the pandemic, right? So a lot of people gave the longer rope of the pandemic and a different category too, from consumer brands to consumer durables out here. So let's see how that pans out.
But the stock has not done anything.
The stock has not done much.
In fact, in the last 1 year, it's down 15%.
Yes. Yeah. But speaking about Jubilant Foodworks, let's talk about that, because there have been increasingly positive commentary coming in from brokerages on Jubilant Foodworks itself. And today comes from HDFC Securities, which says that after 2 years of being bearish on the stock, we have upgraded the stock to add. Why is that? Because the company has taken significant steps in improving the dine-in experience. They've added the 99 rupee value for money lunch feast as well, and they have a target of reducing the capex per store by about 15%. So they've upgraded the stock from reduced to add, target at 685 rupees, which also ascribes 40 rupees per share as a value for DP Eurasia, the acquisition that they had made earlier as well. And it was just earlier last week where we had Macquarie removing the company from its marquee sell list, citing potential upside risk to the like-for-like growth itself. And a few days ago, the company had opened its 2000th Domino's store in India. And we had spoken to the management. They spoke about improved LFL growth in the first quarter. The 99 rupee offering that they made for lunch should arrest the decline that we've seen in sales in the dine-in business. And the delivery business will continue to do well all through FY25. We'll see positive growth. Margins have bottomed out. They are likely to grow faster than competition this year as well. And DP Eurasia, which HDFC is ascribing 40 rupees per share to, will be PAT accretive in this year as well. The optionality here is Popeye's Chicken. That will cross about 100 crore in revenue this year too. So that's about Jubilant Foodworks.
I didn't know about this 99 rupee plan.
That's lunch, right? Most times lunch dine-in does not happen for us. We are more of the delivery lunch guys because we can't leave market hours and go for a lunch at Domino's.
What's the most popular, highest selling item for Eureka Forbes? It's still the
Aquaguard. Close to 60% of their revenue.
60%.
But water is such a big theme. I'm presuming that even purified water is going to become a really big theme going forward.
Purified water, but more importantly, purified air. Because, I was looking through their presentation. It was a 91-slide presentation. One of them spoke about how the air quality has worsened year after year. That was scary for us, but also lucrative for the air purifier business, which is in low single digits in terms of their revenue contribution, but is growing very fast.
Talk to people in Delhi. I know somebody who's got an air purifier in pretty much every room. And it must be
I know people who've got an air purifier even in the car, though there's an AC there.
I mean, let's take a quick commercial break here, I think. Devin is still with us. We continue the conversation here on the other side. Stay tuned.
Welcome back. 24,000 has been breached once again. We had hit it about an hour and a half back. Then there was a bit of profit-taking sideways move. And once again, there's been a sharp up move in the last few minutes. Look at the Nifty CPSE index. That's the one which has seen a spike up in the last few minutes. Some buying has emerged in metals too. So the Nifty Metal Index will also come up for you on your screen. In terms of the large cap names, Tata Motors, in fact, the Tata Group stock. So Tata Motors and Tata Steel higher in trade. We spoke about metals. You add I think even a JSW Steel to that list. And in the, CPSE basket, it's ONGC, which is trimming some of its losses. So the gains are only getting stronger. The mid-cap index now has flattened out. It was down 0.5%, but now it's back in the green and is absolutely flat. Banks have not participated in the last 10 minutes. It's been more about metals and few of the PSU stocks. PI Industries is surging in trade. The company has made an acquisition. Sona joins in for more on that. Sona.
Thank you for that. Well, yes, PI Industries, after 1 year, has gone ahead and made an acquisition. This is in the biologics segment. The company's Plant Healthcare PLC, which is a leading provider of novel patent-protected biologics products to global markets and has its markets in US, UK and other areas as well. Now, the consideration is £32.8 million or around 346 crore rupees. This is an all-cash deal that the company has entered into. PHC had consolidated revenues of $11 million with gross margins of 60%, but they made losses of $4 million. This is as on 31st March 2023. Now, this is an all-cash deal, and remember, PI Industries has cash of around 3,900 crore rupees in its books, most of it which was raised by their QIP. The brokerages, they like this particular acquisition. Jefferies is a buy call on the stock. They say the acquisition would give an annual revenue opportunity of around $75 million, and valuation is also attractive considering the product traction that the global market is seeing right now. Centrum says that yes, this acquisition shall strengthen PI's biologicals portfolio. However, at the start, it would be EPS decretive due to the losses that the company sees, and it is still at a nascent stage, but there is an opportunity to grow it from current levels, and that's why they are positive on this name.
Okay, thank you very much for that. Deven Choksi is still with us. Deven, is this a promising acquisition for PI Industries?
Yes, absolutely. I think the more important part is that when you have India manufacturing operations, which is quite competitive in the global space, and when you have global registered the products, which is significantly important for any companies which are in this business, be it UPL, be it PI, be it anybody else, I think they will probably find a merit-based approach wherein on one side the registration of the product and the market exists. On the other side, you have the manufacturing, which is quite competitive on the cost. I think that exists. So if you marry both, then definitely I think it's a profitable activity per se. Though this acquisition, in a way, I think we are not yet completely gone to the economics of it so far. But I believe that I think the directional call that they've taken in bringing their presence into the European markets particularly, I think it's remaining positive. So yes, I think this company, as such, I think company is operating with a good amount of financial discipline. They have cash in balance sheet, and then they go for acquisition. So invariably, I think they get the advantage of buying the asset at a price because they have the cash in the balance sheet. So we like this particular approach for this company as well.
Got that. Deven, Reliance Industries, of course, I mean, something you track pretty closely. Third day on the trot. Moves, I mean, of course, it had come off a little bit, so it's come back up to about 3,060 levels. Just what's the dominating driver here? Do you think is it the same telecom tariff increase expectation which is driving this, or it's something else? What's your sense?
So other fundamentals being equal, Prashant, I don't think that many things have changed as far as the narrative of the fundamental is concerned. Yes, I think we continue to believe that there is going to be a significantly higher case for increasing the ARPU, and so would be the improvement into the profits of the telecom venture per se. Currently, which is growing at around 20% odd kind of a growth, could possibly grow in about 20% plus kind of a growth, I think, if they increase the ARPU, and given the kind of connectivity that they have established in the ground in the mobile. So that is definitely distinctly possible. But to me, I think the current surge in the stock price is largely because of the fact that the additional amount of money has started coming in, and it has started coming into the frontline stocks. So earlier you saw the likes of NDFC Bank pulled up the entire banking space as a whole, and at the same time index weight also is higher So to a greater extent, allocation of money started happening in different other stocks because of the new inflow flow. And Reliance was lagging behind for quite some time. With the new allocation of money coming in, the large caps like Reliance, I think, had to move. That's what we are seeing. As such, I think we believe that given the underlying strength of the retail business, as well as I think the business of Geo platform, and soon to be announced the renewable business, which will go on a commercial scale, believe that the underlying potential for unlocking the valuation as far as Reliance Industries is concerned remains extremely high in next 2 years.
All right, so positive on Reliance Industries. Reliance hit a record high yesterday, continues to do well in today's trading session as well, among the top contributors to the frontline index, which now has moved about 100 points from the time we started this show. They've been, just hanging there. We're seeing big moves in a couple of these power-related PSUs as well. So we have NTPC, which has moved to the high point of trade. Giving it company on the way up is Power Grid as well. And then from the broader markets, we do have some of these, MNC industrials which are doing extremely well. So Siemens has now begun to move higher. ABB India is doing well. And then the EMS plays or, the manufacturing plays like Dixon Tech, etc. are surging too. I wanted your thoughts in particular on names like Siemens and ABB. They've been moving well. A lot of them have seen decent moves this month itself. And every time they've been, looked at as companies that trade with a high premium to the other peers as well. What are your thoughts here? Would you look at any of these?
Well, I think, yes, agreed that the valuations have always remained higher. But on higher valuations, also the quality of the business has actually always improved. And that is what is significant. Though these companies, I think, would probably trade or they remain undervalued for some more time, till the time I think the market gives the momentum. It has happened. But the fact today is that I think they are having on one side the visibility of larger amount of order book. Given the fact that a significant amount of thrust is there in the areas of infrastructure, be it power or power-related utilities, or be it railways, wherein I think these companies have significant presence as well. I believe that I think the visibility for earning has remained extremely sharp in the coming times because of the order book that they're carrying. Though the valuations are expensive, I agree. But when market gives corrective downside, that's the time when you buy probably with a margin of safety. I believe that I think if you ended up buying in the fall, probably I think 20% odd kind of return is definitely expected out of such kind of companies in your portfolio.
All right, Devin, we'll leave it there. Thank you very much for your time and thanks for staying on for an extended bit today. Appreciate it. So that's Devin Choksi with some perspective. By the way, some really fast-paced moves, and it's changing so fast that you risk getting it wrong by the time you look at it and report on, say it out loud. Because we were up 160 points, which is basically from 230, exactly from when we started. The market has rallied 100 points. 230 on, 100-point rally on the Nifty. 160 points is what that basically translates into. And something similar on the Nifty Bank as well, if you can look at it and see. Nifty Bank has been very, very subdued, so not very much at all on the Nifty Bank. I don't think we're seeing big moves, but the Nifty itself, it is really something, a sight to behold, just because of the sheer sort of large moves that we've been seeing.
So the expiry-related moves, Prashant, you said 500 points in terms of a move that we've seen.
I think that's 600 now.
That's become 600 now. And Tata Motors, that's the stock which is seeing a big surge as we speak. And the 3 p.m. move on the Nifty has definitely happened on the way up itself. There was a fair amount of call writing at the 24,000 call on the Nifty. So if we can, just once again pull up the call of 24,000, the one that expires in just 30 minutes from now, it will be interesting to see whether there is some more short covering which is likely there, because when we started the show, the premium was close to around 30 rupees. Now the Nifty is at 24,040. So those guys are obviously out of the money right now, and we'll perhaps see some more short covering if the market sustains at levels out here itself. So the next 15 minutes will be very interesting. But Tata Motors, that's the one that we were talking about. A big spike is what it's seen. Held its 79th annual general meeting yesterday. In conversation with CNBC-TV18's Shailesh Chandra, the managing director of the passenger vehicles and electric mobility business, spoke about the comprehensive game plan that the company has for electric vehicles going ahead.
I think the competition is going to be really good for the EV industry, because there will be a lot of buzz in the market about electric vehicles. There will be combined marketing spend. We have expanded our reach to multiple places, not only in terms of our sales outlet but also service. This year we are going to launch Curve EV as well as Harrier EV, and subsequently you'll have Sierra EV and many other products which are going to come. So I think we have a very comprehensive plan. Financial year 22 and 23 were very strong growth, double-digit growth for the industry. We saw moderation in the financial year FY24, where it came down to roughly 8.5%. Typically, the secular growth rate for PV industry is in between 6 to 7%. We believe that this year, because of the last 3 years of very strong growth, there will be a moderation this year. This can be therefore anywhere between 3 to 5% growth rate. That's how I see PV industry. It will be more skewed towards the H2. H1 will be slightly more challenging as compared to H2. Post monsoon things should be better, and post the festive season. So that's how I see the industry.
Girish Wagh, the executive director of Tata Motors, also spoke about the capex plans, the industry growth and the expectations from the union budget. Listen in.
In Tata Motors commercial vehicle business, we have given a guidance of around 2 to 4% of the revenue will be our capital expenditure. Over the years, the amount that we have been spending on advanced technologies addressing the mega trends of autonomous, connected, electrification, software, digital has been consistently increasing. And I think, in fact, this year, more than 40% of our capital expenditure will actually go on these technologies and developing our products and services in alignment with these trends. As far as commercial vehicles is concerned, the government's push on the infrastructure has been very, very beneficial. So we expect the government to continue that, and that's the stated intent also. Secondly, I think the government has also been very supportive on electrification with both demand and supply side incentives, whether it is FAME, PLI, GST. So we expect those also to continue.
That's interesting. You know, I just want to quickly highlight two other names, right? We mentioned Reliance Industries. The market's right there, 150 odd points. But IT will be first off the block with earnings, and there is expectation that there'll be it'll be a little better in terms of a quarter, the first quarter. And Infi is up 2% as we speak, and you got TCS, which is coming up with a decent gain as well. At this point in time. So this is some of the other stuff which is moving on as far as large caps are concerned. Some more important sound bites from large companies, and this is coming in from Mr. S.M. Subramanian, who will take over the role of chairman for both L&T Group's sort of listed technology companies, LTI Mindtree and L&T Technology Services as well, after A.M. Naik stepped down. My colleague Shilpa had the opportunity to speak with him on the sidelines of the AGM yesterday, and I just want to play out a quick soundbite for you. Listen in.
There are green shoots, there are positive signals. I'm sure it will reflect on the results. That's the way one should see it. The way our IT companies are doing, 10 to 12% growth. One of the best performing mid-tier companies, now they're majors also. As we just mentioned, the 5th largest in market cap and 6th largest by revenue, and we continue to grow. Right. Both the companies have the right leadership and the right kind of atmosphere to grow. They're well recognized by the clients. We started some new business like L&T Green and L&T Semiconductors, so spending a lot of time on that. We are more in the design aspect of it. If the design does well, tomorrow we may look at contract manufacturing, but we are not going to invest in a foundry or an OSAT or such a facility. That is not in the cards. So we are more on the intellectual part of it, that is the architecture, the concept, the design. And tomorrow, if some client wants us to assist them in contract manufacturing, we'll look at it seriously. But very clearly, we're not entering into any investment in foundries or OSAT or anything like that. No.
That is S.N. Subramaniam, the new chairman of LTI Mindtree and L&T Technology. And he also spoke about, of course, semiconductors business. But since we're on the subject of IT, there are two brokerage notes on IT companies. The first one is HCL Tech, where Macquarie has an outperform rating on the stock. It's a marquee buy for them, and they've raised the target price by 6%. Now, the key reason for the increase in target price is their margin expectations for next year and the year after. FY26 and FY27 have gone up. The reason is HCL Tech's margins came under pressure for the last 2 or 3 years, from FY20 to FY24. And that's because of rapid expansion in their workforce. But now what Macquarie is arguing is that a lot of the incremental workforce has been the fresher hiring. So the overall cost of the employee will come down as the revenue, starts expanding. And therefore, in their estimates, that FY25 margins will remain subdued. But in FY26 and FY27, aided by higher utilization because you've added on low-cost employees, freshers, their margins will expand. Kotak Institutional Equities has written on Coforge. They've initiated coverage on the stock with an ad rating. Their target price is at 6,000, and they're saying that strong growth will continue. They're factoring in a 20% EPS growth from FY24 to FY27, which is driven by about a 12% organic growth and some expansion in their margins. They're valuing Coforge at 30 times forward multiple, FY26. That said, even though they are anticipating, a 20% EPS growth, Kotak does believe the company's own ambition of hitting $2 billion in revenues and 150 to 250 basis points of margin expansion appears to be ambitious. There are some risks that they've also highlighted. One is key man risk. Now, a lot of the turnaround which Coforge has seen in the last last few years has been on account of, Mr. Sudhir Singh, who is the new CEO of the company. He came on board a couple of years back, and the growth of the company, saw a massive jump up. So there is a key man risk associated with Coforge. Two, close to more than 70% of their revenues come in from BFSI and travel. Therefore, high vertical concentration. Third, M&A integration related risks of Cigniti acquisition, because they've acquired Cigniti for its, the Fortune 500 clients, 28 of them. They need to integrate them well, make sure they can cross-sell to derive the synergy benefits from it. And fourth, now that Bearings is completely exited, they do not have a promoter, so you need to make sure that there are corporate, adequate checks and balances, corporate governance standards are maintained in the absence of any promoter. So that's about, two IT companies, since IT is, one of the leading sectors of the day. But let's now focus on Godfrey Phillips, the company's family feud case between son Samir Modi and mother Beena Modi. Samir Modi has received a big relief from the Delhi High Court. Ashmit joins in with the detail. Ashmit, first, even a little bit of the background.
Well, there has been trouble brewing within the promoter family as well as the boardrooms of KK Modi Group companies and the likes of Godfrey Phillips. Now, what's important is that on May 30th, Samir Modi had attempted to get himself involved, be party to the boardroom proceedings. And there, Samir Modi has alleged that he was roughed up by the PSO of his mother, Beena Modi, that the other boardroom members were participants. They were watching. They did not intervene, makes them participants. To that end, Samir Modi has also filed an FIR. He's also moved the court for monitoring that investigation. The court has directed for CCTV footage to be secured. But independent of these proceedings, Samir Modi moved another application before the Delhi court. And in this application, he points out that this dispute that occurred, this incident that occurred on May 30th, is indicative of a larger dispute brewing within the family, and that he anticipates two major concerns. He brought to the light court's attention two major concerns. The first is that he anticipates that on account of this dispute, he's likely to be thrown out of the board of various KK Group companies, including Godfrey Phillips. That's one. The second is that he has invested considerable energy, time and money behind growing the retail division of the company, the Godfrey Phillips, which is 24/7. That 24/7 is growing, is sprouting up across various cities. That is the second concern that he highlighted, that he anticipates that Godfrey Phillips will actively try to run the retail division into the ground by refusing to pay the vendors, the salaries, even the electricity electricity dues. Now, it is in response to this that the Delhi court today has passed ex-parte orders granting relief to Samir Modi. Ex-parte orders have been passed restraining Beena Modi as well as the board of directors as well as the group companies that, number one, Samir Modi cannot be tossed out of the board. That simply cannot happen. The other key relief that has come his way is that this business, the retail division of 24/7, cannot be discontinued, cannot be shut down, cannot be run into the ground. What's also important is that Samir Modi has extended an olive branch, saying that he hopes that this dispute between the family members can be settled via talks, can be settled via mediation. That is something that the Delhi court has taken on record, but importantly, has deferred the hearing in this matter to the next month of July. Again, important to point out, these are ex-parte orders. So Beena Modi, the board of directors, the company members were not heard today in these proceedings. So that is something we'll need to watch out for. But for now, certain relief coming in for Samir Modi, cannot be thrown out of the board, and 24/7, the business has to be continued by Godfrey Phillips.
All right, 24/7 business has to be continued by Godfrey Phillips. Not a big immediate impact on the stock, but this is definitely an imponderable that we'll keep an eye out on. Nashmit, thank you for bringing us updates on that one. We'll take a short break. On the other side, we'll get you what the dealing rooms are saying in our special T Street chat. Welcome back. The Nifty now closing in towards that 24,050 mark, nearly 0.75% in terms of gains coming by, and that is despite the Nifty bank still being in the red. So we are now seeing some pickup in a couple of these auto names. So M&M is one of the stocks that has moved higher. We have Adani Ports as well, Adani Group stocks doing well too. And we've seen a sudden pickup in a couple of these FMCG heavyweights as well. So ITC is one of them that has recovered from the lows, and from the broader markets, FMCG names that are doing well include the likes of PNG. So that's the one that should come up for you, up around 5%. And, all the others which are surging. Kalyan Jewellers for one, up around 5% as well. Good time to get in what the dealers are saying right now. Nimesh joins in with all things from the D Street chatter. Nimesh.
Hi, Mangalam. So another strong day for the markets, but the breadth is quite weak in today's market, and the mid cap has relatively underperformed. That's been the trend of this week, and that continues today as well. So it's a large cap led rally in the Nifty, and to some extent in the Bank Nifty as well. Having said that, again, the trend seems to be that the FIs are net buyers, and I understand there's going to be a market at close basket buying as well in select Nifty names. So that's going to add to the FI data, and on top of it, there is a Nifty rebalancing as well. So today's number will not be very clean to read, because there is Nifty rebalance, there is MOC flows, as well as the large blocks where the promoter entities were sellers. So again, that will add up to the institutional data. But the big sector of the day is clearly cement. We've been talking since morning on the back of a large M&A which UltraTech announced, and a potential consolidation. We've seen big moves in the cement stocks, and there is a bit of buying interest as well. But broadly, the feedback is that this last leg of the rally is largely led by the large caps, and now you're seeing some bit of underperformance in the broader market stocks.
What about stocks, Nimesh? What's the buzz that you've picked up on individuals' names?
Well, Rima, it's all about blocks and more blocks, right? So most of the names that I'm mentioning are part of the stocks with large blocks. The first is Arvind Fashion. The stock is under pressure today, down 5%. There's a large block in the morning trade, nearly 25 lakh shares. I understand the promoter entity was a seller, and leading domestic AIF was a buyer there. So disclosures could be interesting. The second name is Styrenex. Earlier it was known as Ineos Styro Solution. Large block in that stock. Well, the stock is recovered, but even there was a block of more than 7% equity changing hands. Again, the promoter entity was a seller, and some large domestic mutual funds and a few large HNI investors were buyers in that block as well. The third is where I'm hearing potential block deals. So the first one is AU Small Finance Bank, virtually a day's low, but the anticipation is that there could be a large PE stake sale in AU Bank, and the second large deal could be in Polycab. Again, in Polycab, while the stock is under pressure today, there is an indication that the promoter entity could be a seller in that name as well. So these are the two potential blocks. Add to this, there is a bit of anticipation that maybe Bharti Airtel could happen either today in the last 15-20 minutes, or early tomorrow morning. So again, Bharti is something to track as far as block is concerned. And the last name is HDFC Life. After a long time, some bit of interest seems to be back. So today there are very strong buy flows, expect high delivery volumes, and looks like some bit of FI interest is back in HDFC Life at these levels.
Okay, AU Small Finance Bank and Polycab, that's interesting. So these are potential blocks. I mean, could happen even today. I mean, post-market hours, we'll know. I mean, many of these happen very quickly. Nimesh, on Bharti, what are you hearing specifically?
Prashant, so I highlighted this a couple of days back as well. So indication is maybe Singtel will be a seller. They've sold in the past as well. And again, Singtel could be a seller in the Bharti Airtel block. So that is something to track. The indication is, I mean, at least from a market point of view, the feedback is there is a bit of depth now, which suggests that the block can happen in the last few minutes of today's market, or maybe tomorrow morning as well.
That's a very large block, right? I mean, I think they own about 3%.
Oh yeah, exactly. So Singtel has been a seller in the last 1 year in Bharti at every levels, and now again the indication is that maybe Singtel will sell further, because the stock is also rallied pretty hard, right? So, but again, for telecom overall in general, Prashant, the other important thing to track, which now every sell-side analyst has been writing, is the tariff hike, and the indication is that maybe that's around the corner. It's not a question of now whether it will happen. Now it's a question of only as to when it will happen. So again, there is a lot of chatter with regards to telecom, and to the fact that maybe some tariff hike is around the corner.
AU Small Finance Bank, I think there was a board meeting today where they were going to consider a fundraise via QIP. So board is meeting for a fundraise, but simultaneously bankers are working on a block deal. Nimesh, thank you very much for that. Mitesh is with us now for a few BTST calls, or STBT. Mitesh, in this market, it's only, buy today, don't sell tomorrow?
No. I think BTST, guys, we should follow the discipline. You buy and sell tomorrow and then shift to some other stock. I think that's the way to do it. SRF looks very good to me. So 24.40 should be the stop loss. 2,500 could be the target for tomorrow. And the other one which I like is Petronet, which I will give a BTST with a stop at 318 for targets of 324.
Right. Just before we let you go, do you have a view on Avenue Supermarts? Now recovered a strong bit from the lows, actually. Currently at the high point, nearly 4% of the lows. It's zooming ahead. It's seen a good recovery from its 52-week low as well. And, ever since the company has announced that it will increase the pace at which it opens stores and also look at Q-commerce as an opportunity, the street seems to be liking that. We've seen a bunch of brokerage notes as well. The other one, when we talk about quick commerce, you can't keep your eyes off Zomato. Every dip out here is being bought into as well. It's not too deep. Zomato is the other stock that should come up for you on the screen. Currently higher, spiking. Both Zomato and DMart, if you put together, the move has been pretty similar in terms of the way the chart looks. What are your thoughts here? Is there any trade in either Avenue or Zomato?
So, Zomato, I don't have a very clear trade as of now. The trend is up, but from a trading, risk reward equation kind of view, DMart or Avenue Supermart looks very interesting. Keep a stop below 48.60 here. I think this could retest the 5100 level, which it tested a couple of days back, and maybe even go higher. So, very positive chart.
Okay, thank you very much for that. Amrish Balika is also with us now. Last 10 minutes to go to wrap up what's been another very strong session. And week to date, we're now inching towards a 2.5% rally. Amrish, afternoon. We always look forward to your stock pick. Which one is it today?
Today's pick is PG Electroplast. That's an EMS provider which is fully backward integrated. And they manufacture a range of equipments right from air conditioners to washing machines, LED televisions, air coolers, bathroom fittings, as well as automotive components. They have 7 manufacturing facilities here, and they cater to about 70 Indian and international brands. The company has grown 10 times in the last 8 years. In fact, the revenue has grown from 263 crores to, in FY24, at 2,747 crores. The order book also is extremely robust. I'm expecting an EPS of about 100 for FY26, and here my target price is 4,000.
All right, Amrish, thanks a lot for that. Just stay on. We'll take a short break, come back. We'll continue our conversation with you and also, look at market closing. It's been a phenomenal series, almost 1,600 points in terms of gains, and now we're quickly moving towards that 24,100 mark on the Nifty. So the last hour blast definitely belongs to the bulls. A lot of short covering is what we saw on the 24,000 call on the Nifty. So expiry moves clearly playing out. We'll cover all of that after this short break.
Welcome back. The Nifty is comfortably above, 24,050 with a 200-point up move. One story which the market is waiting to play out is on the telecom side and tariffs. Even Nimesh was talking about it, and it appears to be a matter of when and not if. Ambarish, now the question is that we've been expecting a 15 to 20% tariff hike for a while now. How much of it is in the price? Assuming we get one in the next few days, will we still see a positive up move on the stocks?
Although for the last couple of days we've been expecting this hike, but I don't think it's still there very much in the price. I think as and when it's announced, I think we'll see a decent up move, especially for Bharti as well as Vodafone, because that's one stock which has been on the move. And a hike in tariffs will be extremely positive for Vodafone.
Yeah, with biggest delta, right? Actually, let's just take a quick look at what all these stocks are doing right now. I think I saw Indus Tower, which has moved to the high point of the day. It's up about 3.6%. Idea has moved to the high. You can just have these up quickly. Indus Tower 3.5 higher. Yeah, there you go on your screen. Pull up Idea, sharp spike. It's moved to the high point of the day, about 4% up, almost. I was joking how Idea at 18 is now an adult. It's now almost 19. So it's a sharp move coming through there. Bharti, of course, it's the big one. So 2% higher, 1485 on Bharti coming through right now. Look at Bharti Hexacom. Of course, it's seeing a bit of a move on the other side. Reliance is not seeing any incremental moves, but yesterday was a very large move for Reliance, and it's third day of gains coming through, 3,064 on Reliance. If the hikes do come, whenever they come, and we've been Reema's been, of course, highlighting this for the last fortnight or so, Amrish, but some are saying, well, this would be the first. So, the first hike could be whatever, 15, 18%, but then it kicks off the process of more hikes in the future. So,
absolutely.
Is that the way you would look at it?
Yeah, because till date, for a long time, we've not really had an official hike. Whatever ARPU improvements we were seeing across all the players was more due to a better mix than real hikes. So, this hike from that point of view will really improve the revenues as well as, as well as the bottom line in a major way, because whatever increase in revenue, I think straight away goes to the bottom line, because, with these, hikes, your expenses don't go up in the same proportion. So most of it will come to the bottom line. So from that point of view, I think it's extremely positive, which we've been waiting for a long time. And like I said, across it is positive, but I think more for Vodafone.
All right, we're looking at markets to close in just 2 minutes from now. As Nimesh said that there could be perhaps a large trade on Bharti in the dying minutes of trade. If not today, then maybe tomorrow. So just keeping an eye on Bharti as well. The stock's suddenly taken off at the high point. Tariff hikes, is something like you guys were just talking about. But, it's the bulk deal that we'll keep an eye out on for Bharti Airtel as well. Just 2 minutes to close. Let's see whether that happens right now or maybe sometime in the near future.
That's a bit, but if it's, I don't think it's happened now. Volumes are, you'll see that. It's a big one, very, very big one. So, we'll of course keep track of it. So telecom spikes once again. The market, the Nifty looking very strong, almost 200-point gain today. We were talking about the sum total of all the up and down that we've seen. Guess what? It's about 800 points for the Nifty. So just an incredibly volatile day just on the index. Nifty Bank quieter just in terms of moves, sheer moves, not at all comparable. And of course, I don't think there was any improvement, even though whatever else was happening on the broader market, in the Nifty, there's been no improvement really in the broader market. So advanced decline is still sharply negative. 900 stocks are higher and about 1,700 stocks are lower. And the small cap index will end about 0.6% lower. And the mid cap index also will end. The mid cap index will end about 0.4% higher. But market breadth is negative. But once again, I think can't take away from the simple fact that very, very vibrant markets and lots and lots of activity through the course of the day. Lots of blogs, a big deal. What more can you ask?
There were lots.
The expiry. Add to that the expiry.
But there were lots of stories today. The big one, of course, was cement and the purchase of, the purchase by Ultratech Cement of a 23% stake in India Cement. So cement stocks were on fire. IT, which has been a laggard. Now, year to date, the Nifty is up 10.5%, but the Nifty IT index just turned year to date positive. In fact, it turned yesterday. So IT, which was a laggard, has now come back to the party. Reliance Industries continue to maintain its momentum. 1% gain today, but closed about 5.5%. for for the week so far. On the broader market side, you've had India Cements, of course, the big gainer. Whirlpool was higher. Macrotech Developers, Mazgaon. You had Root Mobile, which spiked up on pretty large volumes. Lots of action, though the advanced decline ratio was a bit disappointing at 1:2. One stock gaining for 2 in the red. It's a wrap and closing bell from the entire team. Thank you for watching. Don't go anywhere. Markets Forward comes up next.